Welcome back to Global Money Talk. Our guest today for Market Insight is Dan Ives, Managing Director and Senior Equity Research Analyst covering tech at Wedbush Securities. Dan, welcome. So last time when you were on the show, you highlighted Tesla as an out-of-consensus call, and obviously you got that one right. Leading up to last week's earnings release, what were you looking at? What were you tracking? What signs were you following that gave you the confidence that Tesla was progressing as a company?
Yeah, Dan, I thought the main thing was just margins. I mean, if they were able to improve margins, and we kept feeling like they were going to be close, once they showed that inflection point, that to me changes the story. Because now margins start to go back to a 20% from an auto, gross margins ex credit. And then the delivery growth into next year, 20 or 30%, even you hit the bottom part of that, this is a stock that's north of $300 in my opinion. I think sentiment got way too negative for a company that is really in between two growth waves.
Got it. And what do you think investors should most pay attention to over the next, say, 6 to 12 months for Tesla to separate the facts from noise? Because I'm sure there will be plenty of noise along the way. What will you be looking for?
Look, I think the long-term story is autonomous AI robotics, FSD. But in the near term, what's really going to drive the stock? It's about delivery growth. It's about delivery growth in China. It's about margins upticking. And it's really them showing that the worst is in the rearview mirror in terms of the price cuts. I think that is really going to be the yellow brick road to the next phase of Tesla. But look, we believe it's the most undervalued AI name in the market. I think the AI story alone is worth $1 trillion. I think what we saw here is the market mispricing and miscalculating the underlying core growth for Tesla. And even I thought Robotaxi Day, I thought the takeaways many had were just the wrong take. I mean, that's their opinion, but I did not leave there disappointed. I think maybe lack of details, but that's what to be expected by Musk and Tesla.
What about in between earnings reports? Are there any qualitative things that you track to monitor to see that the progress is on track for the company?
Yeah, we're always tracking deliveries across geographies. We do a lot of visits to different factories, in terms of what we've seen from Tesla, in terms of different factories, throughout the country, throughout the world. And to me, it's really trying to understand where the inflection points in these stories are. I mean, you look at the story, you look at the energy, the power business. You look at now some other pieces of the story. I think next year the big focus is going to be the sub $30,000 vehicle. And then with the longer term piece of Tesla is going to be autonomous, FSD, cybercab. I mean, that is the future of Tesla.
Got it. Let's talk about Apple. What's your long-term view on how AI plays out for Apple?
I think in the near term, it's going to be one of the catalysts to just a massive upgrade cycle. Now, some will say, okay, Apple Intelligence 18.1, it's not blowing me away. But remember, this is iterative. 18.2 will come out in December. And it's all part of Apple Intelligence coming to the iPhone, which doesn't stop here. This is going to be going on for the next few years. You have 300 million iPhones in a window of an upgrade opportunity. So this is the start of a super cycle. I believe it could ultimately be a 2-year super cycle for Apple. We estimate 20% of the world will ultimately interact with AI through an Apple device.
When Apple announced its partnership with OpenAI some months ago, some people thought that Apple was signing away its future, that it was basically giving up on AI and therefore its future. Why is that view wrong?
Because that's Apple just partnering. And ultimately, Apple recognized they were late to the game on AI. They needed to accelerate it. OpenAI was the perfect partner, right? And I think they'll also get a perfect partner potentially in China over the coming months. Cupertino, when you have 2.3 billion iOS devices and 1.5 billion iPhones, you ultimately control the narrative. So for Apple, this is just a very, very strategic process to build out AI for Apple. And I think many investors that have missed the last, 1 to 2 trillion in market cap for Apple have, I think, underestimated the power of the install base.
Do you think LLMs become commoditized eventually?
I look down the road. I mean, there could be some commoditization on the consumer side, but I think what differentiates, let's say, Apple is going to be the apps built on top of Apple Intelligence. Just like Google and Meta, they're going to attack AI in a whole different way for their ecosystem. So that will be like the second, third derivatives of AI as it all plays out. My whole point is, what's being factored into these stocks, it's still being underestimated what the true earnings power is for AI over the next 1, 2, 5 years.
And I know you're bullish on Apple, but how does Apple fail? Meaning, it seems like this company could essentially, there's nothing that this company can do that could go wrong. But what if you had to think about sort of a bearish thesis on how Apple fails, how does that happen?
Look, I think if you're bearish, antitrust, DOJ, I mean, do some of those issues maybe change the business models down the road, right? I mean, and we're seeing with Google as well. Two, to make sure that they're aggressive on the AI rollouts over the coming year. I think that is very, very important, especially given essentially this arms race that's playing out across AI. And the third thing is really just making sure that the services business continues to see this sort of mid-teen type growth. I think that's going to be ultimately key to the valuation. We're very confident in all those things, but if you're a bear, those are how maybe the story would go off track.
Let's spend a few minutes on software. Cybersecurity. What is the most underappreciated cybersecurity name in your coverage?
I think most underappreciated cybersecurity name would probably be, I think to some extent still CyberArk. Even though the stock's had a huge run, I think investors still are maybe underappreciating just what that I think could become over the coming years. I think if I went like small cap or mid cap, a name like Varonis, data security play, I actually would argue they're probably one of the core AI cyber plays out there. Those are two that probably stick out when I think about cybersecurity, which is a subsector that we're very bullish on.
Got it. And last time when you were on the show, you mentioned how AI probably disrupted the software sales cycles more than it helped in 2024. But that's about to change. So over the next, say, 12 to 18 months, in software companies, what are you looking for specifically to identify AI winners early?
Yeah, it's a great question. I think it's monetizing the install base. That will be the key with Salesforce.com. ServiceNow, it's already played out. Adobe, Oracle continuing their motion. I think we're really going to be focused on who has the use cases that are succeeding. It's all being led by Palantir, right, from a use case perspective. But in terms of software companies playing into install base. I think that's really going to be key and something that we're laser focused on going 2025.
Got it. Well, we'll have to leave it there. Dan, thank you again for joining us.
Thank you so much.
And thank you to our viewers for watching. We'll see you next time.